Hi, it's Lee and welcome to the Tesla Economist. How will Tesla's stock price 4x or start to get close to that $1,000 price tag? Well, you might think simple. They'll just build lots more cars, reduce the cost, lower the price, increase demand, and receive huge amounts of profit. Or perhaps you aren't sure entirely, but just have blind faith in Elon because he's such a genius and he'll make it happen. He even said he thinks the stock will be closer to 8 times its current valuation. He must be right. And it's because of cars, energy, and robots, obviously. Yes, a 4 or 5 times return on Tesla sometime in the next few years would be great. It would be great for any investment. Hey, even if it took until the end of the decade, that is still an outstanding return on investment. It's all happening. Tesla are working around the clock to make these ideas a reality, even if it's taking a lot longer than we initially told. So let's say we're talking about Tesla hitting a $2 trillion valuation sometime this decade. Everyone is excited about various events coming up, even this year, with Cybertruck launch, Mexico factory breaking ground, potentially a sister factory being announced, Shanghai Megapack factory breaking ground, a Gen 3 reveal, and various other important, exciting events that could occur anytime this year with Tesla. But let's face it, unless inflation magically goes away and the Fed pivots back to lower rates, then we aren't going to see anything substantial in the financials to warrant Tesla having a $2 trillion valuation that soon. Unless the stock hits a P/E ratio of around 200, which I think would be hard to achieve in these economic times. However, sticking with a P/E ratio of 50 and that $2 trillion valuation, then we need earnings to hit around $40 billion. And 2023 will likely be somewhere between $15 to $20 billion. So we aren't too far off halfway, depending on Tesla's margins and deliveries for the year. So what will it take to double earnings? And I don't mean by next year or 2025, just what in general will it take, as timelines are not something that are the easiest to measure with Tesla. What chances do we have of hitting $40 billion in earnings sometime, perhaps this decade? Now, to be clear, this is just one perspective of how to look at Tesla as an investment, and I'm going to take the perspective of Tesla being an asymmetric investment. Asymmetric investments are like the get-rich-quick investment, for lack of a better word. You try to predict how the future may go, how will it look, what will people be doing, etc., and then try and envision what products will be popular then. Then you try and invest in said products or companies today and simply wait until the future changes. And suddenly, these companies are in the right place at the right time. It's like a spider making a web and simply waiting until it catches some flies. Just like how years ago, many of you thought that perhaps EVs might have quite a significant part of the future of transport, and thus invested in Tesla accordingly, and waited. Some of us waited about 4 or 5 years until the stock price started to move. But that's the nature of the game. If it hits, then you may get a 10 to 20 times return on your investment, hence the asymmetry. And Tesla did hit. But now it has lost some of that momentum on the direction it looked to be headed. A couple of years ago, an investor might have assumed that by today, Berlin and Texas would be producing 1 million Model Ys a year, with 4680 cells at production rates of above 100 gigawatt hours a year. This is why Tesla's stock price was going so high. Everything was on track for this to occur. And then, when you did the numbers at the time, Tesla even felt undervalued. But to be honest, that future of Tesla is now more uncertain. We've been told 4680s will ramp up next year, but we were told that last year several times too. So now we're left with a chance that 4680s may well ramp up in the next year or few. And if they do, then they're a license to print money, as they cost so little to produce relative to other EV cells, that there are so many avenues of profitability for them. And if we hit 100 gigawatt hour production in Texas, and perhaps 100 gigawatt hours production in Nevada, and possibly Fremont and Berlin produce them too, then there's perhaps 250 gigawatt hours of 4680 cell production globally. If Tesla can make a gross profit of just $200 per kilowatt hour, I would expect it to be closer to 300, at least when the economy is better. Now, even at 200 gross profit per kilowatt hour, with 250 gigawatt hours a year, that's $50 billion gross profit on top of everything else. Probably in the region of about $44 billion additional earnings. If you add that onto the earnings for the rest of the business, then we're probably talking well over $60 billion in earnings total. But even at a $200 gross profit per kilowatt hour for 4680 cells, and Tesla are just at 100 gigawatt hour a year run rate, and if there has been a little bit of growth in energy and services, then we are probably talking about our target of $40 billion in earnings, with a P/E ratio of 50, hitting a market cap of $2 trillion. That is one way Tesla could quadruple in the next few years, solely from 4680 cells. most likely comprising of more Model Ys at lower cost, Cybertruck ramp, and semi-trucks. It's up to you to determine what chance you think that will happen. If you think it's a 1 in 2 chance, then those are good odds, as in you have a 1 in 2 chance to quadruple your money. I'll take those odds all day long. Tesla have not bet the entire company on 4680 cells though, although it was a big bet nonetheless, with those 2 factories still running under half capacity today. Tesla is not just a car company, and we can say this now with more confidence as we see energy grow and expand. If we include the Megapack business and we take Lathrop at full alleged capacity of 40 gigawatt hours a year, then Shanghai's new Megapack factory hitting perhaps 60 gigawatt hours a year, and then perhaps another 50 gigawatt hour a year from Europe, perhaps in the next few years. And sure, potentially more expansion in California, Texas, or Mexico as well. But let's just lock in those 3 factories, and it would give us an annual capacity of 150 gigawatt hour a year run rate for energy. Now, if energy is $200 gross profit per kilowatt hour, then that's a further $30 billion gross profit, which likely, when you convert it into earnings and add on to the rest of the business, will take us to our target of $40 billion in earnings. Therefore, again, it's up to you to assign the chances of how likely you think Tesla's energy storage business will be this successful. 150 gigawatt hours of cells is not too big a deal to produce. CATL able to achieve that and could probably build sufficient factories for it in about a year if necessary. You might also assign a 1 in 2 chance that this may occur in the next few years too, but that's for you to determine. Of course, energy is not just Megapacks. We have Powerwalls, Autobidder, solar, etc. So there is all that potential there too. And what about Tesla's contingency plan for the 4680s using LFP to grow with a lower cost model that appeals to a larger total addressable market? We've heard lately that Tesla plan to build production enough for about 4 million Gen 3 vehicles a year. However, most people are thinking still more around 2 million vehicles a year. With costs of the vehicle reducing significantly, tax credits and subsidies, then I think it's fair to guess that Tesla could profit around $10,000 per vehicle. With 2 million vehicles a year, we're at $20 billion additional profit, taking us to around our $40 billion a year target again. Then think of what odds you assign to this event happening too. What about FSD too, of course? What if that is finally solved and passes regulation sometime in the next few years? Well, if Tesla charged perhaps $3,000 a year for FSD, it would take about 6 million Tesla drivers to adopt that to hit our target numbers. But I think FSD being solved would initially make the stock price run perhaps to about our $2 trillion valuation, without the necessary earnings to support it in the meantime. And then again, with robotaxis to take it even higher, if that started to become a reality. To start with, this would probably send the PE ratio flying rather than earnings, but it has the same consequences as an investor. Then assign a probability to that happening. The other major area of Tesla's future that we look to is their robot business, which could supposedly be bigger than the rest of the company put together. If Tesla can profit $5,000 per robot, then they only need to build 4 million a year in order to achieve $20 billion additional profit, which would likely take us to our target valuation too. Again, you just need to think of what probability to assign to this event, perhaps 1 in 3 or something. There could always be other bubble events along the way too, when the whole world thinks there is going to be a new paradigm shift and everyone jumps into investments with FOMO, like the dot-com bubble. Well, this could occur with AI perhaps, and Tesla is very well situated to run any potential AI bubble. Although this wouldn't affect earnings, I'm just stipulating that there are other random black swan events perhaps, even that could make the stock go crazy, even if it's just temporary. Equally, there may also be negative events that could occur, like something goes bad in China. I mean, there are macroeconomic situations too. Something might occur that lower rates and people start buying cars again eventually, whether it's after a severe recession or we're in a recession now. Either way, there is a chance that in the next few years, we have won the fight against inflation and we return back to some more economic stability. This would mean that Tesla could raise their prices again as vehicles cost less due to lower rates, and there's more demand for more consumer confidence. This would end up increasing margins and profits, but probably not enough to give us enough earnings to hit our target, unless we've seen 4680's ramp or Gen 3 ramp. I've got to say, there are a lot of ways Tesla could show a 4 times return in just the next few years. It's almost like rolling a dice. Every so often, you get to roll the Tesla dice and see what comes up. Will Gen 3 manufacturing be what they say it is? Will 4680 ramp? Will FSD be solved this year? Will robots reach new levels of application? Will energy be profitable as it looks? Or many other random events that could occur. And if just one time your number comes up, then you win. In the meantime, you get to keep rolling these dice to see what else comes up. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.